Shiv Puri is with us, founder and managing director at TVF Capital Advisors. Shiv usually sort of comes on and joins us from Singapore, but I think he's joining us from a very hot and sweltering Delhi. Shiv, good morning. Good to have you with us here. Come to Bombay. I think it's much better weather. It's raining and it's monsoons are finally here. I think you are coming, so.
Yes, I am. Yes.
How are things going, Shiv? I mean, markets, of course, doing their own thing. And despite all the turmoil in the world, equity markets pretty unaffected. At least the big global markets largely unaffected in that sense, right? Dips have been shallow, swift sometimes, but very shallow, short-lived, and always money looking to buy, especially here in India. What's your assessment now, Shiv?
Well, I think globally, if you look at it, the biggest worrying factor is really geopolitics. And as long as geopolitics remains localized, it doesn't become a global problem, markets are seeing past it because earnings are still pretty good, at least in the West. In some of the big tech names, earnings have done very well. Here in India, you're seeing the last 1 year where earnings have slowed down. But as I look forward, you've seen a few things happen that I think will be quite constructive for the markets. So first is that liquidity in the system has gone up. You've seen the Reserve Bank cut interest rates, cut CRR, and that's an important factor. Second is you're starting to see pickup in rural consumption, which is always a good thing. Third is government capex seems to be coming back on stream again. And the two other areas, which is private capex and urban consumption, are the only two things that I think have plateaued. And a lot of that is because a lot of urban consumption is because of the tightening by the lenders for unsecured lending. So if you look at the layout for the next sort of year or 2 years, the backdrop seems pretty constructive. And finally, I'd say, come September and December, you'd see that in the base effect as well, because that's when you really saw the earnings slow down last year. So you'll have a favorable base as we go later in the calendar year.
Yeah, and then maybe, eventually those earnings numbers start looking good. Shiv, good to have you on the show this morning. Thank you for joining in. So since you sound fairly optimistic and constructive on equities, including perhaps India, what's the approach to the market now? What parts to buy? Where do you still see some semblance of, let's say, valuation sanity, if not valuation comfort?
Yeah, so they say you need three things to have a constructive market, right? You need liquidity or easing liquidity, which India has. You need a good long-term fundamental story, which India has. And you need cheap valuations, which India does not have. So it's the third part that is going to be a little bit of a limiting factor in terms of returns. But if you look at valuations, there's quite a big disparity between what you see in the large cap established names versus what's happening a little bit in the mid and the small cap names. And I've always had this fundamental view over the last 2 decades that the big companies do end up getting stronger. And we're seeing that. We see companies in India with 20, 50, $100 billion market capitalizations, growing at very, very healthy rates. So if you're seeing sort of the larger cap names, the names in the indices continue to power ahead, I think that at reasonable valuations is a pretty good place.
Let's get to your top sector focus then, Shiv. What are you bullish on? I recall, in the past, we've spoken about that IT a little bit cautious on that space. And that's been pretty much on the ball with regard to that call. Currently, how are you placed in this evolving global landscape? You have Trump's tariffs that are at play, geopolitical issues as well. Which is the sector you're most comfortable on?
Well, I think more than sectors, there's a lot of opportunity on a bottoms-up basis, which is the way we've always thought about investing globally. And if you look at but sectors, financial services, healthcare, especially hospitals, consumer discretionary, are probably three areas that are looking pretty good. I don't think much has changed. When we were talking about a year ago, I was talking about the same things. So I think that still looks pretty good. And there are, different pockets of interest. You look at the online recruitment space. There is a particular company that's, continues to do well, and that has diversified its business. So you have to just look at some of these bottoms-up opportunities. But I would highlight those 3 or 4 sectors.
Shiv, that second point that you said, that a bull market needs 3 things, good long-term story, liquidity and valuations. That second point, liquidity, I mean, let's face it, the money that mutual funds were getting every month, I mean, those flows have halved from the peak. It's still not hurting because the SIP book is very, very strong. But could that become a concern if the market doesn't rev up again? Because FPI flows have been patchy at best. Your thoughts?
Yeah, so I think liquidity is two parts, right? One, of course, is flows, but the second is what the Reserve Bank does, liquidity in the system, which has been very tight the last few years, but now has loosened considerably. So it's also liquidity in the economy, and that's sort of where I was coming from more.
Yeah.
Okay, take your points. We're talking more from a monetary markets point of view. But just to complete, my question was really that we don't have very strong MF flows as of now. And foreigners, I mean, we keep hearing that India is a great long-term story, but we yet to see a very consistent one-way move in terms of foreign flows.
Yeah, but I think one of the things we've seen in the last few years, right, is the dependence on foreign flows has declined significantly for the strength of the Indian equity market. And maybe over the last few months, things would have slowed down, but we've also come off very high numbers. In absolute terms, the numbers are still very strong. I don't think significant more liquidity from a flow standpoint is needed into the equity markets. Once the economy starts picking up again and you're starting to see the conditions perhaps laid out for that, and the equity markets start responding, typically capital tends to flow with a little bit of a lag.
No, absolutely. Point taken. So these three areas, right? Financial services, hospitals, I remember you've had a long-held view, and consumer discretionary. These are the three buckets where you are looking at looking for opportunities. Financial services, I remember, it's all large caps, right? In that sense, Shiv? I mean, it's a place littered with lots of accidents, across, banks, NBFCs, MFIs, except the top tier in that sense. And that's where those are positions you hold?
And that's exactly the opportunity, Prashant, in financial services. It's because it's littered with accidents, the ones that do not get into accidents tend to compound really well over the long term. I mean, very few people would realize that over the last 12 months ending March, the fiscal year ending March 2025, the largest private sector bank was the best performer in the Nifty. So it's also a case where if you avoid the accidents, you actually get significantly ahead.
And just to revise your thesis on hospitals and what you own here, and how are they looking now? Because I mean, lots of names have run up. Even some of the what used to be laggards, Narayana Health, etc., new all-time highs, strong performances over the years. What's the thesis now?
Well, hospitals as a category actually is a very tough business, and it's historically not done well globally. But in India, we have a few things that are different. Number one is highly underpenetrated. And so if you have quality care at scale is very important. So brand and scale really matter in this business. And you're able to build clusters in the major markets that have established need for healthcare. If you're able to attract the right doctors, therefore attract the highest paying patients, it becomes a virtuous cycle where the return on capital can be very, very high. And it's one of those industries I think you look at in India and say, if there were a few more hospitals or a few more hospital chains, you don't see the beds will be lying empty. The beds are lying empty if there's a problem with quality or consistency in healthcare that's provided.
Valuations are still okay, Shiv?
Valuations there have run up a bit, but I think, again, it depends on how the company is allocating capital. There are very few companies who are doing it smartly, where they are becoming effectively quite capital light through brownfields, through management contracts, etc. And so, the downside on hospitals is it's a capital intensive business. And if you're able to solve for that, it becomes a very attractive business.
All right, Shiv, final question before we let you go, leading into our next discussion on real estate. What's your thoughts on the theme, the real estate theme here in India? The developers who join us on the channel say they're in the initial years. Some believe that maybe we're in the latter years. How are you placed on the real estate stocks? And also, if not the real estate stocks, do you have a view on the ancillaries, say the pipe makers, cement, or the likes?
So we've never done anything in real estate, so I can't really comment on that. But in terms of the ancillaries, I think the important thing to keep in mind out there is what is the moat of the business? What's the barrier to entry in that business? There's certain ancillaries where that's very high and they've done very well. But in most cases, it is fairly commoditized, and pricing tends to be the decisive factor, which makes the business a lot less attractive. So to me, that's the number one thing to keep in mind for the ancillaries there.
Shiv, consumer discretionary, the third one, which you kind of alluded to. Talk to us about what exactly are your ideas?
Well, so over there, if you look at, perhaps one of the most successful retailer in India, it's a very difficult business, retailing. And if you get it right, some of the wealthiest people in the world globally, whether it's the Waltons or whether it's the Adidas family or whether it's the Aldo family, etc., have done it through retailing. And it doesn't necessarily have to be grocery retailing. That's not the only way. But there is a retailer who's I think really started to crack the model the last few years, and the upside there is huge because the market's very underpenetrated at the moment.
For educational purposes, nothing else. Shiv, which one? Sorry, which one are you talking about? Are you talking about the whole spectrum? You're talking about Trent or Titan or?
Well, I can't talk about names, Prashant, but I think you're on the right path. Your guesses.
Okay, all right. Got that. I think we'll leave it there, Shiv. Good speaking with you. Appreciate you joining us and running us through that view. Helpful. I mean, in terms of when you sort of look through the day-to-day moves, to have a framework in mind. And I think Shiv has provided us with some of that, especially as far as, financials and healthcare and especially consumer discretionary retail is concerned. So that's Shiv Puri of TVF Capital. Markets are up about 60 points. 24,774 is where we are at, guys.